Last week, the V-shaped rally got a reality check, as investors are fearing that the country is going to be locked down for a second time. And really, we haven't felt the full effect of the first lockdown yet. And to be quite honest, I don't know how we can recover if the economy gets shut down for a second time. In this week's video, our team's going to cover what happened in the news last week, a key level that we're at on the S&P 500, and what we feel is going to move the markets in the near future.
Over the past few months, the U.S. markets have rebounded off of their March lows to almost back to flat. But last week, after news of more coronavirus cases and the potential for more economic shutdowns, the markets sold off drastically. The S&P 500 and the Dow Jones were down about 5% last week. On Thursday alone, the S&P 500 was down about 6%. The Dow Jones was down around 1,800 points, again on Thursday alone, which was about 7%. Now the Dow Jones is down double digits for the year. The Russell 2000 last week was down almost 8%, now down almost 17% year to date. The NASDAQ is the only U.S. index that's still positive for the year, as it's still up almost 7%. Now, foreign and emerging market stocks were also negative last week, but not down as much as the U.S. markets. And now for the year, foreign and emerging markets are both down just over 11%. Now, the biggest news story from last week was on Wednesday, when Fed Chair Jerome Powell came out and said that they'll be holding interest rates near zero until 2022 at the earliest. Now, he also mentioned that it might take a few years for the job market to rebound and recover from the over 20 million jobs that have been lost. Next, Mike is going to be going over a chart of the S&P 500 and a current level that everybody's watching.
Good morning, everybody. Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning, with this week's market breakdown video. We're going to be taking a look at just the S&P 500, and on my screen here we have a purple moving average. This is the 200-day moving average. It's the line in the sand that a lot of people look at from a longer-term perspective. Over the 200-day moving average, usually bullish; under the 200-day moving average, usually bearish, and we will usually have a battle right around that 200-day moving average, and ultimately the winner of that battle will kind of determine the next move that we get. You'll notice at the end of last year, June, August, and September, we tried that 200-day moving average and we continued to push higher. Earlier this year, when we broke underneath of it, we bounced back up and we failed right back in the zone and continued to head lower. 2 weeks or 3 weeks back, we broke back up over that 200-day moving average and we pushed up into that really important resistance zone. We talked about it at that 3230 level. Failed there, and now we have headed back down, and you'll notice we're right back at that 200-day moving average. We are below it at the moment, so the bulls really need to get us back up over that 200-day moving average for that potential move up. If we lose this area, the next zone of support really comes back in at that 2720 level. So what happens here is very, very important. We're going to continue to watch that this week.
As I said at the beginning of the video, we haven't truly seen the economic disaster that was created due to the first lockdown. And one of the data points that we've been watching closely is the number of quote-unquote zombie firms that are in the United States. A zombie firm is essentially a company that generates cash and makes a profit, but they don't have enough profits to actually cover their debt payments. Currently, we are sitting around 20% of all US firms as zombie companies. Think about that. 20% of all US companies are now on the verge of bankruptcy. And it's safe to assume if we see another lockdown which causes another economic shutdown, that those numbers will continue to increase and the numbers of bankruptcies and unemployed will continue to pile up. Last week, Houston officials said that they're getting close to imposing another stay-at-home order. And for those of you that aren't aware, Houston's actually the fourth largest city in the US, so this is a pretty big deal. Because if Houston chooses to go down this path, we could see that trickle into other major US cities. And if you remember, President Trump is urging all state governors to not lock their economies back down. And he has also promised to not lock the country back down if there happens to be another second wave. If you enjoyed this video, we would love for you to hit the subscribe button as we're really trying to grow our channel. Also, make sure you follow us on Facebook, as we always post up-to-the-minute information on the markets, as well as investing and retirement tips. Thanks for watching.